So a special shape around a doji can occur around the shadows. Remember, the shadows are the wicks of the candle. Upper shadow would be the upper wick. The lower shadow would be below the real body, would be the lower wick, like on a typical candlestick. As you can see in doji candlesticks, they have highs and lows, of course, and they have a range of prices, just the open and close are near each other. But when we look closer at what might be happening at the top part of the wick versus the bottom part of the wick, either one might be able to tell us a little bit more information, and there's certain doji patterns or indicators around these shadows that can give us more clues as far as what might be happening next. So let's take a look at some of these here. So what shadows do is they provide special meaning when the real body is a doji. So for it to be a doji shadow indicator, you have to have a doji open and close are near each other in terms of price, or exactly or pretty close on. And if you see that the shadow is missing, not much of, let's say, an upper shadow, let's say you have very little or no upper shadow, that's an indication that something's happening. Or if the shadow is extremely long, let's use that same upper one where it might be very tall, those are situations where we have dojis, and these different lengths of these shadows can be very impactful as far as telling us, from patterns that have happened in the past, what we can expect. So there are some common shadow patterns to watch for. And they can have, real interesting names too. But the main thing is you want to watch for these patterns, because dojis can be rare, but if you see them, they might be a great opportunity. So let's look at these common doji shadow patterns, again, looking mostly at the wick and see what that might be telling us. So the first one here is a Dragonfly doji. I love that name, Dragonfly doji. And you can see the image there on the right there. And if you look at just the image, what is it telling you? Just look at the image for a second. It looks like a T, I guess. But it's really telling you that the open and high and the close were all the same, right? A doji by its nature, the open and the close would be similar or at the same. But in this case, that the actual high was the same as well. So not only open at the high and close at the high, the whole price range at the very high of the whole price range was at the top. So you'd have this long lower shadow doji, right? So the doji below it is a long lower shadow, and that's a Dragonfly doji. And really what's happening here is that, the price opens and sellers are really trying to drive the price down. They're trying to see if somebody will sell for less and establish a new low, right? They want the close to be below the open and try to establish a new low. But they didn't succeed. In fact, not only did it not succeed, it got pushed back up to the point where the open and the close were a doji and were the same, and near the high it started at the opening of the day. So how you interpret that, and you always need to look at the bars preceding a doji to interpret a doji. Again, dojis don't tell us things just on their own. You got to look at the bars preceding it, the candlestick preceding it. So the preceding bars are in a downtrend. We're trending down. Then buyers are emerging, and the downtrend may be ending. Think about it. It opens lower because we're in a downtrend, and they try to go lower still, but the buyers say, we think we're ready to buy. We think this is too low. And then they come in, they drive that price back up, drive up that from that lower shadow, because we see the range on the low, and they drive that price back up. So in a downtrend, buyers are emerging, showing a transition. Remember, dojis are transition indicators. If the preceding buyers were in an uptrend, then sellers are emerging, preventing the buyers from moving to a higher price, and the uptrend might be ending. So you think about that. We opened at this price. Buyers might be wanting, let's go higher, but oh my gosh, there's all these sellers just drove everything low, and the buyers just couldn't even move it above the opening price. They got kind of stuck there. So it's another way to look at it, but it shows the uptrend might be ending. So again, the doji itself, you can't look at that and say, oh, we're going to start buying. Oh, we're going to start selling. You have to look at the preceding bars and whether they're in a downtrend or an uptrend. And you'll see that with some of these other examples as well. So that's a Dragonfly doji. Let's look at a Gravestone doji. So if you look at that one, it's kind of the exact opposite, right? You have a long upper shadow. You have a long upper wick. The open and the close were the same or approximately the same. Again, that's the whole concept of a doji. If you had a thick real body, then it's not a doji. But this one is, because the open and close are the same. No real bottom, shadow. It's all upper shadow. And so what's happening here is the buyers are trying to drive the price up and establish a new high, but they didn't succeed. Opened at a price, tried to drive it up, came all the way down. The closing price was near the opening. So again, we're going to look at the preceding bars, and the preceding bars were in an uptrend. Then what's happening? Sellers are emerging, and the uptrend might be ending. So we're trying to go up. Buyers are saying, let's push this baby up higher even still. But sellers are saying, no, we're going to bring this down at least to our opening here, and we're going to bring it all the way down for the close back to opening. And so that uptrend might be ready to transition or end. Same thing with preceding bars in a downtrend, just the opposite. Buyers are emerging, preventing sellers from moving the price lower, and the downtrend may be ending. So we open at on the left-hand tick side. They might be thinking about trying to go lower, but buyers are like, nope, let's get this high range up here. Let's try to end on a high note. Doesn't end up that way. It ends up coming back down to the close being the same as the open. So that's the doji, but it's an indicator that things are happening and a transition might be on its way. So be watching for that if you are in a downtrend. Another way you can look at dojis too is if they're missing shadows. So sometimes the shadow can be very long or very long or short wicks. But what if they're really kind of or long in one direction or another? But what if they're missing a shadow? Like let's say you have what's called a shaven top. You can see in these examples here for a shaven top where there's really nothing going on as far as higher highs. There's no real high other than the opening of it or the closing, depending on how you look at it. But they have this long shadow on the bottom. So these are two different examples. So if the opening is at the high, and it's all downhill from there. So in the red one, we know it opened at the top of the rectangle, top of the candle, and then went down way down as far as that long candle, that long wick at the bottom. But there's nothing really at the top. That's a shaven top in a downhill or downtrend. And you think about it, it's kind of a double bearish, right? Double bad for prices, right? Not only is the day down, but there's no buying really occurring even after the open. Everybody was kind of selling and kept driving the price down. We know from that it's a red candle that the opening was higher than the closing because it's a red candle body. And we know because there's no wick at the top that there really was nobody trying to drive those highs up. Now, as opposed to the green one, it's the same thing. It has a shaven top, no higher highs, but the close is at the high. Again, our opening is going to be at the bottom of a green candle, at the bottom of the rectangle, and it's going to go up from there. Well, it might have gone down for a while. Sure, there's a low range, but it closed at near the high. And there was no higher highs in terms of a range, but it's a real positive sign that the close went really kind of pretty much up from there. So that's a shaven top. And you got to look at that one individually to see, what's the trend doing, and what's really also especially what was the opening and what was the closing, whether it's a bull or a bear type of thing. Are prices rising or falling? Bearish prices are falling, bull prices are rising. The opposite of that, shaven bottom, right? So we can look at our candles, not much wick coming out of the bottom there at all. It's all kind of a main body, and then of course a wick at the top. So if we look at the green one there, a bullish shaven bottom, we can see that it opened at the low of the day. There was not anything lower going than that. There's no wick below that, and that the buyers really dominated to drive that price up. So it was really a bullish thing. They drove it up even higher if you went all the way up the wick, but it still settled up higher than the opening. But there's no bottom in it, so it's a very bullish sign by itself. The opposite, of course, would be if it closed at the low, then sellers are dominated. It's a red candle, so the top of the rectangle would show us our opening, bottom would show our close on a rectangle, opposite of a green one, or of our real body, and it would show that it closed lower. So the sellers dominated. So even though it opened and tried to go up higher up that wick, it really ended up down as far as in the closing prices were right at the bottom. It wasn't like it went lower and then went back up a little bit with a wick extending out of the bottom. It was like, no, we're going to get this as far down as we can, and we're going to close there at the end of the day. And that's what happened there as far as with a shaven bottom. Now, these missing shadows, shaven bottoms or tops, if they're really long, that can mean something too, as far as the wick or that range is very long. So the shadow is as long or longer than the real body, right? So that's the key you're looking for. Are these really long wicks around them? And they got to be longer than the actual real body itself to be a true, long type missing shadow. Again, may or may not follow through into the next day, so that can be a little tricky. It's not a guarantee, but it's certainly definitely an indicator. And again, you want to judge relative to the preceding bars, but you can kind of see here what that might look like as far as the shaven tops or shaven bottoms and really long wicks with these really long missing shadows. So let's look at that. So if you have a really long, let's say long upper shadow, long upper wick, so the high of the day is well above the open and close. Remember, it's going to be longer than the real body. So the high of the day is, the absolute high of the day is well above what it opened at and what it closed at. So the price series is an uptrend, right? So think about we're going upwards in prices. That's a good thing, going up. And you see a long upper shadow that shows the failure to close at the higher high. And that actually may signal an uptrend is over. It's like, okay, we're still in trend. It's still a green candlestick. We still went up. Our opening was lower than our closing because we know it's of a green triangle. But we know that we tried to drive that price up real high and even a higher high. But we didn't get there, so it may signal when you have a shaven bottom and you have a long upper top in a uptrend that uptrend might be over. And then really just the opposite in a downtrend, right? The long upper shadow shows buyers are willing to buy at higher levels, and it may signal that the downtrend is over as well too. So look at what's preceding and then look at your candlestick and see what color it is as far as the opening and closing, and then be watching for these long, really long missing shadows as far as going up the top there. Same thing with the bottom, you know, as far as coming out, a long wick coming out of the bottom. A long lower shadow shows that the low of the day, the lowest price of the days in that range was well below the open and close. Remember, it's a long wick you're looking for, not just it's a normal wick, it's got to be longer than the real body. So if the prices are in an uptrend, we would know that because it's a green real body. The long lower shadow shows that traders are not willing to buy at higher levels right up to the close. You know, they're exiting at the high, and they may think new highs are not justified. So it may signal that the uptrend is decelerating, it's not as strong, or it may actually even signal that it's ending, so you want to watch that closely. And then the same thing with prices or series is in a downtrend. The long lower shadow shows a failure to close at the low. We didn't close at the low, otherwise it would have been a narrower or maybe a shaven bottom, but it's actually showing a shaven top and a very long wick, and that may signal that the downtrend is weakening or over as well, as we closed higher than those lowest of lows that were very, very long, very low lows. It closed up higher than that. So there might be an indicator to watch that an uptrend might be happening. Now, if you see something like this, would you immediately jump in and say, oh, I see that red candle with that long wick, I'm going to buy at the next opener, I'm buying right now. One thing with the trends, you want to make sure that trends become, establish themselves by itself. This is not telling you, it tells you to be watching, but you shouldn't necessarily take action on it. You should be waiting for that uptrend to develop. You just be aware that a downtrend might be ending, and it might be going either sideways or it might even be reversing to a full uptrend, and to watch for that. And we'll learn later in the course about how we can use confirming indicators to confirm these types of moves. But again, really looking for these long upper and lower wicks, missing shadows, in addition with a missing shadow in combination that can really tell us quite a bit.